Hello, everyone. Welcome back to the Trading. I'm Shane Vernier, and this is the 9 EMA trading strategy. Today we're going to go over how to trade the 9 EMA. I'm going to show you how to add it to your charts. We're also going to talk a little bit about money management and where to put your stop losses and your profit targets. But it's all in all just a strategy session. So if you have any questions at all, today's a great day to ask them. We have a few economic events that we need to talk about, and we've got an interesting trade recap that panned out really a lot better than I thought that it would. Not that I wasn't confident it was going to win, but it was the way that the trade really cashed in without any pain. And that's one of the things that I really like about trading is when you hit it perfect and you hit your trade locations and your entries perfect, there's very little pain. And I've talked to a lot of traders. I've had a great opportunity to talk to a lot of traders over the past 2 months or so. One reoccurring theme that I see is folks that are dollar cost averaging into positions. Now, it's not necessarily that that's wrong, but when you add to a losing position, you really increase your exposure. And what I always like to say is, listen, let's keep our losses small and our wins bigger, and we can have an opportunity to really make some money. So that's one of the reasons why I do things risk versus reward the way that I do them. But when we get good entries, really the risk versus reward, none of it really matters. It's just a great trade. So I want to welcome everybody back. We're going to do a little trade recap. We're going to show you some of the new stuff we got over at Switch, and then we're also going to talk a little bit about why the markets are timid today, and there's a key reason why. And then we're going to trade the 9 EMA. I'm going to give the breakdown. We're going to get some entries. We're going to talk about how to add it to TradingView. We're also going to get into exactly how to put it on MT5 and get you up and running on all your platforms. So good to see everybody back. Team Marina, good to see you. T, I was hoping we'd do another 9 EMA session. Yeah, that's my pleasure. I like the 9 EMA. It's a pretty good strategy. The way that you make it really sing, though, is to understand how about where your stop losses need to be. And as soon as you know that, then the rest of it can kind of take care of itself. So it gives us good entries. It really gives us a good way to read the market as well. So I'm looking forward to getting into that. Let me see. Gordon Williams. Let's see. Can we look at the Japanese yen? Yeah, we'll look at the Japanese yen. Second thing up today. It's on the move for a lot of reasons because the BOJ is going to do something with interest rates, and it's going to happen relatively soon. So we definitely want to talk a little bit about the Japanese yen as well. Andrea Gorwal. Hey, Andrea. How are you? Hi, Shane. U.S. dollar Swissy trade was fire. Yes, it was. That's exactly where we're going to start. You read my mind. But we're going to start out with a trade recap there. Looks like there are a few good trades left in 2025. Yeah, but we are running out of time. I feel like, honestly, I would say 2 days left. I would say today is not even really that great, but I would say tomorrow after CPI. Remember, we got CPI Live tomorrow. I'm going to have that for you bright and early. We've got CPI Live, and then we've also got Friday's trade, which I think could be pretty good. Next week, I'm not looking for much out of the markets, but that's not to say that they won't be there and they won't be ready to rock and roll. So we're definitely going to dive in and cover these things. Let's start off with a trade update here. Resistance in view for the U.S. dollar Swiss franc. This was a trade that we put out yesterday afternoon, a good trade idea. And remember, these trade ideas are not financial advice. I am not telling you where to take a trade, where to get in and where to get out. I'm just showing you a little bit of what I do, maybe some support and resistance levels that you probably ought to be aware of, and showing you a little bit of a page out of my playbook. That's all. That's all that is to it. I'm not going to sit here and be a signal provider, although we probably did pretty well this last year. I know we did last January. I remember that. I was keeping track of them, and we didn't lose a trade in January. That was pretty good. And really, it got a little bit choppy throughout the trading year with a lot of indecision out of the Trump administration, announcements and things. We have potentially another one tonight. But all in all, I feel pretty good about where the trading is at. I feel pretty good about where my trading's at going into 2026. And I also think we've got some traders here that have developed a lot, an absolute lot over the past few months. So this is one of those streams where ask questions once we start going over the 9 EMA, and we'll get it up and running. So Marcin from Ireland. Hey, Shane, Marcin here. First time joining live. I usually press and replay. That's great, Marcin. Good to see you. Let's see. Tina Jean, good to see you. Hi, Tina. Welcome, welcome, welcome. All right, let's start out with a trade update. You've got 38% with 79.85. We were looking to sell 79.79s here in this Swissy trade. Really a beautiful trade. No two ways about it. I mean, you can see the market structure here is that classic L formation that I'm always talking about, that capital L, where we just sort of run and rotate. I absolutely love a run and rotate, especially when we're getting into that slow part of the trading year. When you have a situation where a clearly defined resistance level is present, or even a support zone is present, you've got a really great chance to trade flat markets and trade them well. So I'm one of those traders that would love, really likes to trade trends. I like to trade pullbacks. I like to get involved with price action. But man, when these markets dry up and they flatten out, you can do very, very well just by understanding the basics of supply and demand, but support and resistance. I favor support and resistance. A lot of folks love supply and demand, but I like support and resistance. I'm old. I'm a veteran trader, that's for sure. Let me see. Lita, hi Shane. Have you got a stream today? Yeah, I'm already up and live. Oh, you know what? I didn't drop it in the in the live chat here. No kidding. Well, hang on one second. Thanks for reminding me. Just don't really seem to remember much this time of year. It's one technical error right after another. That's for sure. One second, everybody. Just sit tight, and we will be live in the How to Trade trading room. All right, so there it is. There we are. We're live in the How to Trade trading room. Thank you for telling me that, Lita. I definitely blew getting that set up. We need a producer. That's for sure. Seems like we got to drop the code, the YouTube code, in a million different boxes to get it to run on all these platforms. So I do appreciate you letting me know. Andrew, I just recapped this sweet entry that we had on this dollar Swissy. But realistically, the big thing that I like to point out is boom, there it is. That's the formation, run and rotate. And the beauty about the rotation is when the market's dead, you have a really great chance to sell the top if it's a good, nice resistance level. So that was good stuff. I really appreciated that trade. It was a very good one as we roll towards the holidays. Like I just said, you're probably going to have a pretty good trading day tomorrow and maybe Friday, but I'm not expecting much of anything to happen next week. Okay, U.S. dollar, Japanese yen. This one goes out to Gordon. The biggest thing you got to remember about the yen this week is the BOJ is set to raise interest rates. Now, that is really difficult. That's for sure. So we just need to understand exactly where the BOJ stands. They're going to tighten interest rates. That is contradictory and really a challenge for a lot of currency traders to wrap their heads around. Really hard. It's really hard to figure out what the BOJ tightening rates means when the rest of the world looks like they're going to be loosening rates throughout the 2026 calendar year. I don't know really what to make of it, but we do know this. Volatility is on the way. We've got a couple of things coming up during the overnight. You've got the BOE and you've got the ECB both getting into action. Beware, be ready for those. I'm going to put a trade idea out that's going to update you on the expectations from these events and CPI tomorrow, and that's going to go out later today in the How to Trade trading room. So you're definitely going to want to check that out. As far as the dollar yen goes, I mean, I still really like that 153.25 level. This zone right around 153 is an absolute banger. That would be my support zone and definitely one that I would like to look at if we get a chance to by the end of the year. Just not really sure we do. If the Bank of Japan comes out and they are aggressive and they're hawkish and they're saying, okay, we're going to raise rates and we're going to get after it, be ready for a test of 153.25. If it develops, it's going to be pretty good. So you definitely want to get involved there or at least consider it. If you're holding shorts, that's probably a pretty good target down there. If you're thinking about going long, you probably want to wait for price to get out of this equilibrium level and give us a chance to bid down there. Now, as far as the short-term price action goes, like on a daily chart, you'll see exactly what we have. We have a bit of a rally. We had some negative price action this week. That's after the BOJ really, going back even 5 sessions to the 10th of December when it became apparent that the BOJ was going to raise interest rates. That's sort of where all the strengthening came from. And now you've got the dollar sort of bouncing back a little bit with this pair up about 0.5%. If you wanted to be very aggressive, hyper aggressive, we could do something like this, which this is great market structure too on a 4-hour chart. You just have to be smart with your risk versus reward, your stop loss and your profit target. Something right down in there, 155.25-ish. Probably could be a pretty good bump, but I'd probably only be looking for about 10 pips, maybe 12 pips. Right now, your spread on the dollar yen's about 1.5 pips. That's not bad. So you could still scalp that and get a little bit of a positive bump and an opportunity there potentially to grab a long trade, maybe an intraday long trade this afternoon, maybe ahead of that Tokyo Open could be pretty good. So I'm watching that closely as well. But to be real honest with you, I'm interested more in CPI tomorrow, CPI Live, and we're going to have that up and running for you as well. So we want to get you sort of acquainted with the new switch markets. This is the updated website. A lot of new features are going to be coming online. There's going to be a lot of things going on over at Switch Markets. So if you're interested in potentially becoming a trader in 2026, Switch Markets is one of those places you probably ought to check out. At least it's worth a look. You've got a lot going on here with there's potential leverage. Leverage is going to vary a little bit depending on municipality. So you're going to always want to check where you're at and what kind of leverages are legal. But the zero commission account's always attractive. Just, deposit withdrawal fees are nothing, minimum deposit 50. So it's really just a great way to get involved in the markets, even if you don't have much money to do so. 3 easy steps: open an account, deposit funds, and start trading. And they've got you covered. They've got everything you need to really cover you up. MetaTrader 4 and 5. There are some rumors about other platforms potentially becoming available later in the calendar year. I'm going to stay away from those right now, but right now you are up and running with MetaTrader 4 and MetaTrader 5. You've also got the ability to use our Pine connector, which means you can pass through that TradingView account, get those alerts to execute on your MT5 automatically. So thousands of markets globally, everything you need: Forex, metals, indices, CFDs, stocks. That's interesting to me. That's one of those where I'm almost sorry that I'm in the United States, because then I don't get to trade the CFD shares. Just have to trade regular stocks, but that's okay too. Digital currencies, you've got crypto. Everybody's trading crypto these days, so crypto's available. Fast and simple funding. You've got all this stuff, all of these options. And then you've also got an Ask AI, which is in the customer portal. It's going to be complimentary for really all your funded traders. And just take a look at it. This Ask AI is a neat little widget. I was working with it the other day. You can ask them anything you want. Like, how might the upcoming CPI report impact the USD? And boom, it's going to give you the full write-up and what the expectations are. So this AI is actually in the customer portal. Pretty good stuff. And then if gain a trading edge with our AI trading agent, that's one of those features with Algo Builder. Trading analytics, track a trader, trading VPSs, Algo Builder, Pine connector. I mean, these are all features for your funded traders, your funded accounts. So if you're looking for value added, really difficult not to start with switch markets. So you definitely, there's a lot of value there, and there's some things that we're working on that are going to be potentially very good for active traders. So that's just sort of the new platform there. We're going to get into more of that and some of those features as we move forward in time, probably early 2026. We'll have a lot of that broken down for you, but a lot of good stuff there that can get you up and running really quickly. Okay, here's the big thing that's messing with the markets right now. Trump to tout accomplishments in address to nation on Wednesday. White House says, well, we don't know what Trump's going to say, and we never really know what Trump's going to say. But tonight is a big-time address. It's going to go nationwide. There's some things out there that are potential topics that could move our markets. And it's one of those things where Venezuela is going to be a big one. There was a full blockade put into effect, I believe, in the last 12 hours over Venezuela oil tankers. And that's going to be something that's probably going to be addressed. We may get a hint that there's going to be further actions coming from the Trump administration against Venezuela. So that's clearly going to impact your crude oil market. There will be some talking points about Russia, Ukraine in there. Those don't move the market much anymore, not from Trump anyways. They don't shake things up like they did over the summer. There's going to be some comments about some of the scandals that are going on right now here in the United States. There's going to be compliments on the political violence, which is picking up. So we got to really, be ready and brace yourself. And that one's coming at you at about 8 p.m. Eastern, 8 p.m. Central tonight, 7 p.m. Mountain Time, and 9 p.m. Eastern. Probably most of you that are in the UK or the EU, you're probably going to be sleeping during this event. But just remember that if you go to sleep holding a position and you wake up and there's a big move, this is why, because nobody really knows what Trump's going to say. To tout accomplishments, that's going to be part of it. But I'm sort of expecting a real hardline engagement here because of the news cycle has just been absolutely brutal, and the approval ratings are way down. And that's just the way that it looks here in the United States. So let me see. Tina, that looks cool. Yeah, some of the features that we have on Forex signals, or not Forex signals, excuse me, but switch markets, is they're going to be pretty good. And I've got sort of the inside track on about 4 or 5 more features, but we'll talk about those when the time comes. Should be a pretty exciting year to be with Switch. You got credit bonuses. They've got everything you need. So feel free to get up and running with them when you're ready to dip a toe into the live markets. That's for sure. All right, here we go, 9 EMA. The reason why we're doing the 9 EMA today is backed by popular demand. We're going to go ahead and I'm going to show you exactly how to get set up with this strategy, and then we're going to make a few live trades here and see if we can't put a few dollars in the hat, so to speak. I'm not going to stick to targets like we did for our tick scalping. I like to reserve that for my own strategies, but we are going to execute short-term positions using this 9 EMA. And right now I'm looking at the gold market, and it's a it looks to me like it's target rich potentially for a trade here in just a minute. So what are we going to cover in this workshop? We're going to talk about today's schedule, the 9 EMA. I'm going to show you how to set that up on TradingView. Then we're going to do some trade executions, and maybe if we have time, we'll do some Fibonacci entries. I doubt it, though. We very rarely have time here. So the 9 EMA is a relatively simple strategy. And remember, when we go on short time frames, it's a great complement with the relative strength index. So we want to make sure that we understand what the RSI is, and I'm going to go ahead and show you how to get set up and running on TradingView and MT5. So without further ado, here is the gold market. First thing we're going to do is click indicators, and then we're going to go down to moving average. Where is moving average at? It's right with the rest of them, and right there we are going to go exponential. Right there, moving average exponential. Why are we using an exponential? We're using an exponential because it weights the most recent price action, and it puts a little bit more emphasis on price action that's developing right now as opposed to price action that developed a way back. 9 EMA, our periodicity is 9, so you just go right up here to settings, make sure we're dialed in. There's settings, the style. I always like red when I'm trading one. The source is the close. You're going to leave that dialed into the close, and the length is 9. Smoothing, don't worry about any smoothing. And also the time frame, we're just going to go ahead and put that as a chart overlay. That's it. The close, that means it's going to be based on the closing value of the price bar. Okay, so unfortunately, we've already missed this trade, and it just went, and I knew that it was as soon as I looked at it, and that's fine. Let's go ahead and add the RSI, though, our confirming device. Now, the RSI is the relative strength index, and that was built in the early, I believe it was the late 70s, early 1980s by Wells Wilder Jr., who was a famous technician, came up with just a whole bunch of oscillators. So the RSI is an oscillator. So when we look at the relative strength index, we're thinking about identifying a market that is overbought or oversold. That's what we're looking to do here. So this market right here is going to be overbought or it's going to be oversold when price is outside of our envelope on the RSI. Now, as far as our RSI settings go, I use the factory settings. I don't change them at all. RSI length is 14. The source is the close. The smoothing, I leave it all the same. I'm not concerned about any of that. I want the basic format that Wells Wilder Jr. used, and there it is. So this is what we call, it's not a chart overlay, it's in a separate bubble. So we've got our own panel for this RSI indicator, and it's really easy to read. That's why I use it for most of my confirming devices, especially with these moving average strategies. The first thing we want to do is understand that when the RSI is over 70, we look to sell the market. That means it's overbought and we want to sell. When the RSI is under 30, it means the market is oversold and we want to buy. That's it. So how do we get into the market? Well, it's very simple. When price breaks above the 9 EMA, you want to buy the market. When price breaks below the 9 EMA, you want to sell the market. So let's just sort of highlight a couple of trades that would have come across the board in the last several minutes. This is a gold market, 1 minute chart, very short time frame. This right here would have been a buy. This right here would have been a sell, and you would have got pretty good moves out of both of those. However, you would have probably had, a sell there that would have been a loser. You had a buy there. You had a sell there, maybe a buy there. So when the market flattens out, especially like on a 1 minute chart, this stuff gets really difficult. The market gets flat, you get fooled a lot. Now, I've taken a lot of criticism for the 9 EMA, most of it on YouTube. A lot of people tune in, they watch the video, and they say there's no way that can ever work. And I'd say, yeah, it can work. But you have to be smart about what you're trying to get accomplished. That's one of the reasons why when we do this live, I introduce the RSI as confirmation. Now, I probably should make a video. I touch on RSI in the official video. Probably should make another video that shows you exactly what the RSI is and what the rationale is. But essentially, it's as simple as when the market gets in overbought territory, I'm looking for a sell signal out of my 9 EMA, which essentially is just a close beneath the 9 EMA. Now, when we get into oversold territory, I want to buy the market. Now, what does that mean? It means I want price to cross over the 9 EMA, and then I'm going to take my trade. So right here, what do we have developing? We've got our RSI is down there right around 39. Okay, so we're coming off nicely. I'm just focused on the purple line there. I'm not focused on the crossover. You really don't need any of that. We're just focused on the same basic RSI event. So right here, we're coming down. We're headed towards our 30. Now, if we get below 30, we're going to look for price to cross back over the 9 EMA, and then we're going to buy it. It's that simple. 1 minute chart, probably a pretty good trade setup if we can get it. If we can't get it, then we've got a little bit of a problem. So we're going to go ahead and let this one probably cook for another minute or two, and then we're going to get back to it. I think we have a chance potentially to get the buy. We just got to get a bit more of a sell here. We need this RSI reading to trade beneath 30 down here, and then we'll have a chance to get involved to the top side of this market. Maybe not be a bad trade. All right, in the meantime, let's head on over to your switch markets MT5 platform. And this is a good look at gold here on the 5-minute chart. In order to add your indicators here properly, you just go right here to indicators. You go to insert to indicators. Then you're going to go down to trend, and you're going to go to moving average. Give that a click. You're going to make sure the periodicity is 9 and your method is exponential. Apply to the close. And once again, you can choose whatever color that you like. I'm sort of partial to, I don't like deep pink, but let's go ahead with red. Let's go ahead with red and make this line a little bit bigger. I like it to be just a little bit thicker so we can see it easily. So that right there is your 9 EMA, all right? All right, there's your 9 EMA. Let's go ahead and insert our RSI indicator now. That's going to be considered an oscillator on MT5. So you're going to go right down to your relative strength index. Give that a click. Leave everything the same. Apply to the close. The period's 14, and there you have it. I actually like the RSI indicator, the way that it looks a little bit better on MT5 than I do on my trading view. So let's go ahead and take this down to a 1-minute chart and see exactly where we're at. Well, we were almost at 30. You can see what's happening now. We've got a very, very active gold market in this instance. I mean, it is very active. Look at this volatility. More than likely, there's a news item out. That's what I see sort of developing right here. So if we want to make a trade here, this is the same market we were just looking at. It's gold, XAU, USD on a 1-minute chart. Our RSI did not quite go beneath 30. Did it on TradingView? Nope. It turned back up in here. So what can we really say about this market? It's not in overbought or oversold territory. We need to find another market maybe that we can make a trade on. So I'm interested in this gold market. We got to see more of a sell-off, though, before we get the rebound, and that'll get us in. That'll get us in there, and maybe we can make a few dollars. Okay, let's try to find something that's working. NASDAQ, E-mini NASDAQ futures, not quite 1-minute chart. We just aren't quite out of that RSI range. Remember, above 30, we're looking to sell below, above 70, we're looking to sell. Below 30, we want to buy. So we've got nothing here. We've got nothing just yet. See if we can find something a little more volatile. How about the ES? E-mini S&P 500? Nope, that one's not working. How about silver? Let's go to silver on the 1-minute. Nope, we're still sort of log jammed inside of our RSI range. Not uncommon for this time of day in the United States, but still, we would like to get a trade. All right, let's go to the US dollar Japanese yen. Interesting. Okay, so this would be a potential trade. Now, what do we have developing here? This is a 1-minute chart on the dollar yen. Now, I don't particularly like trading 1-minute charts on your Forex pairs. As you can see, the market really isn't doing much of anything. It's moving in fractional pips. So it's going to be difficult to get a decent profit target, at least using a 1-minute chart. However, you'll notice right down here on our RSI, we are above 70. So we're looking to sell this thing right now. In order for us to sell, we're going to have price cross underneath the 9 EMA, and then we can take a sell. We're not quite there yet. Let me see, T Marina, what about the Euro USD? Yeah, let's go ahead and look at it. It's close. You know, you're right down here. We had sort of the low bottom out right around 35. We're just not quite in oversold territory, but we're close. There's sort of your bounce right here. You know, I mean, we could take it without the RSI. I would prefer to take it with the RSI. That's for sure. Let's go back to our Japanese yen and see what's happening here. Yeah, we're a ways off of getting a trade idea, or at least a trade setup here. We need to get a correction. Right now, our EMA is down there right around 155.57. We're trading 155.60. So we're going to have to see something a little more robust than that. Let's look at gold. Gold's still right around 50 on that RSI. That is just, you don't do that. And take a good look why you don't do that. There was your crossover right there. Okay, so if we're not using any sort of confirmation like our RSI, we're in big trouble. Why are we in big trouble? Because we're right there on the 50. That means that we aren't overbought or oversold. We're neutral. Think about it as two football teams at the 50-yard line. We can't really move the other team towards the goal. So we've got to get some disequilibrium in pricing, and we're starting to get it here. I would really like to take this gold trade as an illustration. Probably a very quick scalp here, but we've got to come down a little bit more. Something to think about there. Let's go ahead and watch this for another few minutes, and then I'll sort of jump around. We should be able to get a futures contract trade. We just got to hit a few of the more volatile contracts. Market's flattening out, though, and that's really trouble for these real short time frames. A lot of times, you're really well served at stepping back to a 5-minute chart, something like that, where you got nice peaks and valleys. But we want to execute a few trades here, so we're going to stick with that 1 minute. All right, let me see. T Marina, Euro USD is a no-go. Yeah, for right now, we're probably going to have to wait a little bit. Marcin, Shane, what time frame would you recommend for this strategy? The 5, the 15, the 30, or 60-minute charts? You could get away with it using confirmation on a 1-minute chart. You're just going to end up taking a lot of trades, and it's going to really tire you out. I love the way that the 5-minute chart looks, but I would also, with a 5-minute, I probably would be working with the RSI as well. I really would, because you don't really know, what's going to happen when you get on these intraday time frames. You also have to be aware of the news. It looks like we had some news out right around the U.S. Open this morning for gold. So the 5-minute, I think, is a viable candidate. The 30-minute, like if I was going to be looking at, say, a Great Britain pound USD, all right, and that's a 5-minute trade. Maybe we have one setting up there. 30-minute chart would definitely be something I would look at, and you can see you had a great trade here. You really had a great trade, no question about it. Now, what makes this one special, and, I didn't go through and cherry pick this. We just are flipping around, finding the setups. But so what you have here is you've got 12 a.m. my time, which is about an hour before the London Open. London Opens, I believe, about 1 a.m. my time. So I don't trade many London Opens. But you can see what Marcin on this 30-minute chart, you can see exactly what happened. Our fundamentals for this strategy, our technical setup for this strategy is absolutely fantastic. RSI, look at where it's at. Deep into oversold territory. If that's the case, where's your stop loss going to be? Right beneath that trough. You want it right down here. You don't want it right on it. You want to shade it a few pips. And this is a really rock solid area. Boom, you're in deep into oversold, so we want to buy. So we want to buy. Where's your buy at? Right there. You want the first bar close up over the 9 EMA. Okay? What does that mean exactly? It means you want the first bar close over the 9 EMA. That's your buy signal. That's your trigger. That's what gets you into the market. Now, the problem that we run into a lot of times is traders are anxious. And they say, okay, I've got my stop loss location. We're in oversold territory. And they'll go on that. In this instance, it worked. You want it to be clear. Now, I'm not saying wait for a huge green bar to buy, but you definitely want to buy when it's definitively over the 9 EMA, not right on it. In my view, that's right on it. I don't want it. I would wait another 30 minutes just to wait and see what happened. Now, right there, pretty beautiful. You got the chance to go in right on that bar close, and look what you have. Fantastic rally. You went from 133.44 up to 133.82-ish right now. That's fantastic. So, that's a great example of a time frame I would be leaning on. Now, why did this trade work? Well, you're trading it at the right time. If you were going to trade the Great Britain pound USD on a short time frame, an intraday time frame, and you were looking for volatility, when would you trade it? You'd be trading it during the London session and, more importantly, the London US overlap. Now, take a look at our volumes on this chart. Now, these volumes are tick volumes. These are not absolute volumes. These are tick volumes. And what a tick volume is a tick when price moves, a pip, boom. That's counted as one. So if it goes 1, 2, 1, 2, 1, 2, up or down, up or down, up or down, that's all the different movements that develop during that 30 minutes. A lot of folks really prefer tick volume because it shows you how active the market is. I like absolute volume, which is the number of lots that change hands. Very difficult to get that information on OTC markets. So I look at that for futures trading. But this gives you a pretty good idea. Okay, volume, the tick volume picked up right around when? That London Open. Then it sort of stabilized, and it was nice and steady. And then during that London U.S. overlap, it kicked up. And that's exactly when you want to be trading something like this compared to sort of later in the U.S. session. I was talking with a trader about this yesterday, and I said, the thing about trading late U.S. session is it's not real great, especially not for Forex. Now, if you're trading stocks, that's something completely different. But for Forex pairs, you can see the volumes really start drying up in those afternoon hours. So then you're sort of right back to needing a range to develop or participation on your Tokyo Open. So you can see that right in here, and this is sort of the norm, is in the afternoon where I live. You start looking at these charts around 1 o'clock in the afternoon or 2 o'clock. There just isn't anything there, and the actual trading is not very good. So when I look at that, I say, okay, but this right in here, that's premium. That's premium trading. Good tick volume, lots of action, and I mean there's your breakout. So we had to reverse engineer a trade and go find one, but that's a pretty good look at what we're trying to get accomplished. Oversold territory, we set our stop loss. By far the most important part of this strategy. By far the most important is setting rock solid stop losses, and then we're just patient for our entry, and then we get it. Pretty good stuff. 133.07, if we were buying 133.44s, I would want at least a 1-to-1. That's me, but with one of these strategies, a 9 EMA strategy, you can start looking for 1-to-2s and 1-to-3s because you're looking to get in on big moves. So I like 1-to-1s. That's my personality. But if you want to try to stretch it out to a 1-to-2, a 1-to-3, do some back testing first and find out which one's going to work best for you in your market. That's for sure. TM, let me see. And we want to wait until the bar close always, right? Absolutely. A lot of these, and I mean a lot of these, will just break above it, and then they'll come right back down to that 9 EMA. You don't want a part of that. Your confirmation bar is the one that breaks above the 9 EMA. All right, let's see if we can actually find one of these to trade live for you instead of just historical examples. It doesn't look like we're going to get any love at all out of gold. Nope, it's flattening way out. That's why the RSI is so powerful, guys. When you're trading right around 50, you know that you have a non-committal market that has not broken high or low. It's just sort of stagnant sitting there. All right, well, let's get into some short time frames and just see if we can trade some real volatile futures to get something cooking here and show you exactly how to make a trade. We've got some negative action on the board. You can see we got the wrong way on silver for what contest is that? The Leap Christmas USD. I didn't even really care. I just threw some positions down. I shorted metals, saying, well, if they sell off, we'll win. But there wasn't any money at stake. Let's see right here. This is the account we want. All right. So 1 minute chart, E-mini NASDAQ futures. It's not great right now. We're looking for a move. Let's take this down to a 30-minute chart. Let's take this down to a 15-second chart. You'll notice that the volumes are sort of drying up. That's because this is a December contract. May not even be the front month contract anymore. Let's have a look. Remember, if you're going to do this with a futures contract, you need to always be trading the one that's got the most volume on it. I haven't really been looking at the E-mini NASDAQ very often at all. Let's go right here to the NASDAQ 100, E-mini NASDAQ. That'll be the NQ. And what we're looking at here for an exchange-based contract is volume. So what do we have? Yeah, we've already rolled over to March. So we go to quotes, volume. We're always trading the contract with the most volume. So 529,000 is a lot for today. So let's go to that NQH6 contract, and that should get us lined up with the proper contract. NQH6. Now we'll go to NQ. And this is a futures contract. That's a continuation. I want the contract specific. We want March. Remember, these are quarterlies. Okay, so a 15-second contract, a 15-second trade. I mean, this is hard, to say the least, just because things happen so fast. Let's go ahead and get rid of that. So right here, what are we looking to do? We're looking for this price to get outside of our RSI. Now, if you're going to try to trade contracts or strategies on like a 15-second chart or a 30-second, you've got to have some sort of confirmation device. I wouldn't do that. I absolutely wouldn't do that. You'd want to be you'd want confirmation. So at this point, we're waiting for the market to move away from 50, and we can't get any of these things really to move. So we haven't been able to execute a trade. And that shouldn't surprise anybody because we are in rotational markets. We're in holiday trading. So right here on a 15-second chart, we're waiting to get out of whack, out of this above 70 or beneath 30. You can see it does not take long, but we're just not moving anywhere. So if we're not moving anywhere, let's take this time frame down to a 5-second chart. Okay, so if we're in a 5-second and we're still right around that 50-yard line, right around the 50 in the RSI, I mean, it's just the market's not moving at all. It's not moving at all. And if it's not moving, we got to be very careful with what we do because we could get chopped up. Now, could you theoretically trade 5-second charts? Yes, you could. And there's people out there that do them. I spoke with a trader not too long ago that was making 280 trades a day. The problem with that is you've got to be very, very good with your fills, and you've got to really know what you're doing with your executions because you're going to lose more trades. You're going to win more, but you're going to lose more. Your winning percentage will go down, probably the lower in time frame that you go. So a 5-second chart, you can see we're still not deviating really at all from that 50 in the RSI. So, I mean, this is what it is. You're sitting here waiting. Kind of frustrating. We usually have a chart or a trade by now, and I would like to execute one just to sort of show you guys what it is, but it looks to me like it's just not going to cooperate. Let's go down to gold futures. Well, there's a decent bump right there. Okay, so here's gold futures, 15-second chart. Same basic thing is happening. We're not getting really any movement at all. Crude oil, you can see that January, there's just no volume in there for this type of trading. YM. Let's get on that March contract. Okay, we potentially have a trade here. All right, this is going to be your E-mini Dow. And essentially what we're doing is we're waiting for this RSI to tick just a little ways above 70. And you'll notice, I mean, really the rule today is rotational trade. I mean, we're just not seeing any trends. We're not seeing anything that's really super volatile. And you can tell when you go to a 15-second chart or a 5-second chart and you're not getting outside of the RSI very often, that really should be really a sign that nothing's going on in the market. That's for sure. Let me see, Gordon Williams, so don't use the 20 moving average. On this strategy, no, Gordon. You're just going to be using the 9 with the RSI. Okay, so, I mean, do we have a trade even setting up here? This is the E-mini Dow futures. We're sort of looking to the top side of this. Top side is just not, it's at 69.02. It's not above 70. It's got to get above 70 for us to get a trade, and we just don't have it. It's not happening. Let's go to a 5-second chart. Yeah, it's just the time frames are too small. Well, that's sort of where we're at. We just didn't quite get the trade in. The sell would have been right here, and your stop loss would have been up here, but we didn't get it qualified outside of the RSI. It's just not happening. Slow, very, very slow. Let's see if we can find something to trade, huh? Back to the NASDAQ. Typically, the E-mini NASDAQ 100 is the most volatile and usually gives us trades, but we're just not getting it. Let me see. US 500 on the 5-minute. All right, let's check it out. I mean, we could have had a trade back here potentially, right in here. Maybe right there, but probably right here. But right now, I mean, that was a while ago, so that would have been early session. Probably would have got stopped out right there. So for right this minute, we're looking for one. It's just not showing up, guys. It's just not showing up. Can't even get one out of natural gas. Look at that. Can't even get natural gas out of it. Well, that's about a wrap. We searched the markets high and low and just couldn't quite get a setup for us. As far as really what to look for in the coming hours, you really would want to be ready for CPI tomorrow. Be ready for CPI live. I'm going to be back and ready to rock and roll there, and we will be covering that live bright and early tomorrow. But this was the 9 EMA, so just remember that that's pretty much how you trade it, and that's what a lot of trading days look like. If you can't find one, you can't find one. It's going to be pretty tough to get into the market with any meaning today. It's just whipsawing. It's really dead, to be honest with you. Let's go to US 100 again. All right, potentially here on the 1 minute, we have one setting up. Let's see. Okay, we've got a potential buying opportunity here. Okay, so our low right now on the RSI is 28 and a half. So 28 and a half is going to put us in a position in the next 18 seconds to potentially put a buy down. And we're going to want to buy as soon as we get the price to cross back over our 9 EMA. Now, on a 1 minute chart, that's going to be significant. Let's back this down to a 30-second chart and see if we can just get an execution. Okay, we're ready to rock and roll here. Let's go to a 15-second. I've used that in the past. Okay. So what we've got here is we've got price deep into oversold territory. You can see we've dropped beneath 30. That means that we're looking to buy. But in order for us to get our buy signal, what has to happen? We have to get a break and a bar close above our 9 EMA. So right here, we're looking at our 9 EMA. It's not that far away, really. We could definitely get in on this trade, but this would be a buy setup. Okay, so right here, maybe we get it, maybe we don't. The key thing that you need to remember is don't lose your patience. Don't lose your patience. Be patient. So we've got a buy, we've got a market order, and we're going to send them as soon as we get a bar close above our 9 EMA. So right here, do we want to send it right there? Okay, it closed above it. Boom, we're gone. So that's going to be our trade. Where's our stop loss going to be? Our stop loss is going to be right there, right down beneath that swing low, a few ticks. And then we're going to go ahead and put a take profit up here that's at least a 1-to-1. I'm going to put it on at a 1-to-1 and see if we can't get paid off a little bit right there. Okay, so that's our trade. How can we justify making this trade? Okay, we were deep into oversold territory right down here. There's our stop loss. That's the number one thing that you have to remember when you're looking at making these trades. Identify your stop loss. That's going to be the key to everything for you. If you can't do that, it's really difficult to trade this strategy. So that right there, that low corresponds with your big dump on your RSI. RSI goes down right there, deep into the red. You can see it's way beneath the 30 down there at about 16. That is our stop out position. So all right, now our mentality is relatively simple. We believe that at least a short-term bottom has been put into this market. Not a huge bottom, not a daily bottom, not an hourly bottom, but a 15-second bottom. That means that swing low we're betting is going to stay valid until we at least get a bounce to the top side here. That's it. So this is what I would call short-term trading, holding a short-term position in the market. We've got long. We're starting to trend a little bit higher here. Am I confident? Well, I feel pretty good about our stop loss. I mean, if the market goes against me and does sweep me out of there, we lose, but that's all right. That's what trading is about, is winning and losing. You can see on a day like today, we're off about 1.30% in the US 100. It's not a trend day. You're off only about 1%. A lot of folks would call this a trend day. It is not. We had a little bit of selling pressure over the last 15 seconds, but you got a serious value area up here right around 24,750 and even higher up in here right around 24,850 and whatnot. So to me, it's not the biggest trend day in the world. Are we fighting the intraday pressure? Yeah, we're fighting it. You're off 1%. So right here, the market took a bump. We got a little bit of a profit, and now it's rotating against us. This is where you have to rely on your stop loss to be sort of the end-all, be-all. Now, a lot of people that don't use stop losses, this doesn't really, it's not intuitive for them. They say, Shane, if you liked the long there, why do you have a stop loss on it? And the answer is to it's to make sure that we do not get taken to the cleaners. I want to make sure that I get out down there, that I have a way out of this market if things don't go well. That's the bottom line. And if you're risking 1 to 3% of your account balance, then you can take a $334 risk and say, yeah, it's not really going to kill me if I win or lose. If it's a 0.5%, something like that. Biggest thing that we have to stress on the 9 EMA is that stop loss means something to us. It means if it gets taken out, more than likely we are going to go lower. And that's exactly what's developing here. The market's sort of flattened out over the last couple of minutes. We're sort of staggering around. We're not out of the trade yet by any stretch of the imagination, but our stop loss is what's important. It's not necessarily your profit target. Your stop loss is what's important. So a lot of folks, they don't use stop losses, and that's okay. You just make sure you don't take that catastrophic hit and lose 2 or 3 trades in a row. When you really get dumped on your head, it's hard to come back from. So this right here, we know exactly what our risk is. We know what we want out of this trade. Big picture, could you put this trade on for more? Sure. You could take it up for a 1 to 2. You could use market structure and go, yeah, I want to hit. Let's go for that, that top right there where we're making a 1 to 3, 1,000, 1,000, something like that. We're risking 335 to win 1,000. A lot of conventional traders will tell you to do that. A lot of folks on YouTube will say at least a 1 to 3, 1 to 4, 1 to 5. For me, I like to win. I like to win a lot, and I built that into my own approach to the market. So I would be looking for something right in there, right around that 1 to 1, and that would put us sort of at the top of this market structure, right in there. It's not a bad trade. It may win, it may lose. It's not a bad setup. You're not going to go broke making that trade. If you lose 334. I mean, it's not the end of the world. It's not like you lose $5,000. And it looks like we're going to lose, right? Of course, we are trading a 15-second chart. So, the longer the time frames, the better off you are, in my view. But sometimes you want to get in and scalp on short time frames. This is one way to do it. 15 seconds, though. We'll see how this one pans out. Let me see. Hurst Horns. Hello, Shane. Good to see you. Hope you have a Merry Christmas. 'Tis the season. Yeah, we're sort of gearing up for the holidays here. Got a lot of chores to do. I have to get down to the store, finish the shopping, put the trees up and everything, so we should be in pretty good shape. The travel is going to be an issue because the weather's getting bad here. I'm surprised the power stayed on. It's been on and off all day long. High winds and driving rain. Let me see. Marcin. Shane, how much % would you risk on each trade when trading short-term like here? Would you open more than one trade? Yeah, I mean, that's sort of what you would be looking to do, Marcin. You'd need to take a lot of trades. So if we're trading a 15-second chart, something like this, and I was looking at 3 or 4 markets, we're going to take 50 trades a day. I mean, we really are. We're going to take 25 to 50 trades a day, no question. So if that's the case, how much do you think how much could we really stand risking? 1%, 0.5%, something like that? More than likely, that's probably what I would be doing. And, 0.5% on $100,000 accounts, what, $500? It's not much. You could afford to lose a few in a row. Just remember when you're trading a 15-second chart, I mean, you're in this thing to make trades. You're going to have to make a lot of trades to win. Right here, it looks like we're going to get knocked out. We're down about, $200 on the trade. Market's going against us. It looks like we're going to get knocked out down there beneath that swing low. I'm not real pleased with it, but it is what it is. You get used to it because you make a lot of these trades. So I'd be looking at a 0.5%, maybe 1%. You could definitely do that. Based on a 1 to 1, that's what I would be doing, Marcin. And as far as the exact amount of money that you're risking, that's a function of your risk capital. So that's like if you have if you have 100,000 available or 5,000 or 10,000 or whatever, those 1%, those 0.5% are sort of a function of that risk capital, not really a function of the risk versus reward. See, now right here we saw something really interesting. We saw our stop loss was placed in a pretty darn good area. It kept us alive, whereas this area right here sort of just swept, made a run at that swing low, and then you immediately bounce up. You see that more times than you can count. So, this trade still is not in good shape, but you can see that there's a chance that maybe we weather the worst of the storm. It's possible. Let's wait and see how the next few seconds pan out. But right there was your stop loss. If you put your stop right at your swing low there, what do you think happened? You just got nailed. And that's why I always say, hey, put that thing down there a little bit. Put it down a pip or two. Give yourself a chance to win. And you can do that. You just got to build it into your profit target. Make sure you're paid for that added risk. Still stagnation. We would have to get some help here. But you're not out of it yet. Not yet. Let me see. Hurst Horns. I trade a system of EMAs and always find that they work better in pairs. You need a slower EMA to pair with a faster one for higher momentum context. And that's a good point, Hurst. I mean, that's why I like the 920. But as far as a 9 EMA strategy, where you just want to get in and out of the market a lot and build a scalping approach that's based on volume, high volume, you're going to get a lot more trades on just a regular 9 EMA than you are with a 920 crossover or a 5813 crossover. But it's a good point. It's a good point. Let me see, Jason, big game week. Yeah, that's a fact, Jason. $725 to get into the Montana State game. Unbelievable. Tickets at the 50 are going for $5,400 a piece. That's unreal. The prices are unbelievable. I'm going to be watching it on TV. Too rich for my blood. Let me see. Hurst Horns, at least have a 5,200 as a guide. Like, don't trade against the 5,200. Stay in line with them, especially on the lower time frames. It can save your ass not to fight momentum. Well, it's the truth. That's one thing about this 9 EMA where, does it give you a very good read on momentum? Not really. Not a robust read like a 5.813 or a 920, but it does give you a good area to stop yourself out at. And our stop loss, if that thing stands up, we got a real good chance to win. But the question is how long does this take? Do you sit here the rest of the day? It looks to me like we're just sort of on life support. The price is trickling down against us. Life's getting a little bit worse for the U.S. 100, and we're going to go right down to about negative 1.5%, and then bounce back probably. Yeah, we'll see how it goes. Let me see. Hurst, it can be used for mean reversion as well to catch a bounce back to them when extended. But a safe bet is not to fight the flow. There are advanced and basic ways to use them. Yeah, we're going to get knocked out right here, and that's just sort of life. If you're trading short 15-second time frames, you're going to win a lot and you're going to lose a lot. Would have liked to have won this trade just because I hate losing, especially on live streams. But boom, there's the loss. So what's the key thing to the story right there? Right there was your stop loss. I expect things to get a lot worse from here. Will they? Maybe, maybe not. Maybe it'll bounce right back. You bounce back right there. Very, very choppy, though. Maybe not the right time at all to trade this strategy. Could be. Let me see. Hurst Horns, I love EMAs. Just trade a system of the fractal EMAs and macro zones. It's amazing. I'm a big fan of EMAs, especially the 13-period EMA. In any case, that was the structure and the way that you trade the 9 EMA strategy with RSI confirmation. As you can see, there's a time and a place for everything. A couple of tips that I would give. The 30-minute chart, the 30-minute trade we looked at with the Great Britain Pound USD earlier in the stream, that was a textbook example of having great timing and a great setup. You had a chance to buy the Great Britain Pound US dollar going into the London session, and you had a great stop loss. Now, the trade that we executed here was designed to sort of show us the functionality of it. Didn't work very well at all. We ended up fighting a little bit of intraday pressure, and now the US 100 is just rotating around. It's just not good trading, and now you're getting the big bounce back, which is frustrating, but you've got to cut the trade off somehow. So right there's your stop loss. Profit target would have been, somewhere right up in here? Right there was your entry, right? There was your entry. So your profit target would have been up in here. So even if, it would have been right here. So even if you would have weathered the storm on that last trip down, you've still got a lot of work to do to make the money on this trade. That's why I just say cut it off and move on to the next one. 15-second chart, you should be making 25 trades to 50 trades a day, especially if you're looking at 4 or 5 assets. And it can be done. You just got to design your charts a little different, but it can be done. All right, everybody, I'm going to go ahead and sign off. We went a little bit long. That example took forever, but that's how you do it. So if you guys have any questions at all, be sure to reach out to me on the private chat over at How to Trade. We're sort of in the home stretch of our broadcasts for this year. I'm going to go live one more time this year, and we'll be back on January 2nd. Tomorrow, CPI Live. It's an early morning live stream. Have a lot of fun with that. We may pull this 9 EMA out again and trade it. The big thing we got to remember, though, during the overnight tonight, the BOE is going to be involved. The European Central Bank is going to be involved. And U.S. CPI is going to come online about an hour before the U.S. Open tomorrow. So you're going to want to be on your toes for these Forex pairs. It's not going to be it's going to be contentious. There's going to be some volatility. That's just sort of the way that it is. As far as the rest of today, remember, Trump addresses the nation tonight. Going to be 9 p.m. Eastern. He could say any number of things, and a lot of them could really move the markets. And if they, so remember that if you're in the EU, if you're in the UK, if you're in a different time zone here than the United States, if you're in the Middle East, if you're in Asia, remember, or if you're in Australia, remember, if you take a position and just sort of walk away from it, it could be very different when you wake up tomorrow, just because Trump has the ability to move markets and frequently does. All right, everybody, I'm going to go ahead and sign off. Let me see. I found the trail back yesterday. It's darn wild over there. Yeah, it sure is, Wizard. Thanks for coming in. Thanks for popping in. So we've got one more. We've got one more live stream for this calendar year. We've done a lot of them this year. Probably a few, at least 300 of them, I would think, 250, something like that. So we've done a lot. It's been good. We've had a lot of winners, had a lot of losers, but it's been a positive year, as always. Many thanks for showing up and watching the live streams. That's what keeps us going. We've done a lot of strategy stuff this year. We're probably going to do more next year. As far as what it takes to be a trader, stick-to-itiveness, dedication, discipline, all of that, all those things are what it takes. So definitely stick to it. If you have any questions, we'll be here. Just be sure to reach out, and I will get back to you in short order. Probably going to be a new look for 2026 on our live streams and some different things that we're planning. Might just do an all news live stream, and then some live trading streams. Sort of lobbying to trade the real money, but I don't think that that's going to happen. I think that's going to be a regulatory no-no that I'm not going to be able to do. We did it earlier in the year, and I had a lot of fun doing it just because it's fun, but supposedly that's something that doesn't go over real well in a lot of circles. So it can be construed as financial advice, and we don't give financial advice. All right, everybody, I'm going to go ahead and sign off. One last look at this trade, and this thing is going to trickle and break down to the downside. I almost guarantee it. It's just you could see the compression around that stop loss. Once we didn't win right here, we knew that there was a bit of trouble. There was the comeback. There was the first rejection. A lot of times when you reject that stop loss the first time, you get a big bullish run. Didn't happen. This thing's getting compressed around the lows. Typically, that means you're going lower. You're going a lot lower. All right, Tina, Merry Christmas. Thank you very much. You guys have a fantastic holiday. If we don't see you tomorrow, we're going to be back for the CPI Live. We'll have probably the last biggest news event of the year, so you're going to want to check that out. And then after that, I'll have the schedule up, and I believe the next live stream is going to be January 2nd, so we will end up seeing you in 2026. All right, everybody, have a fantastic trading day. Remember, Trump speaks tonight, so be careful, and then we'll be back for CPI Live tomorrow bright and early. Trade the action well, and we'll talk soon. See ya.